Hello and welcome to ETF Pulse, ETF.com's podcast. I'm your host, Kristin Myers, editor-in-chief of ETF.com. Here as always with my co-host, Nate Geraci, president of the ETF store. And unfortunately, Nate, we are no longer in Vegas and we don't have cocktails in hand, but it's fine. We still have a very interesting show today. So first, let's take a look at the Pulse rundown. We're going to start with a little bit of an elephant in the room and Nate's favorite topic, tariffs. They are dropping today, April 2nd, and it is and has had a chilling effect on ETF flows. And speaking about those ETF flows, we've got a record pace going here with inflows into ETFs for the first quarter. And IVV is now second only to VU as the biggest ETF in terms of those assets under management. Can they catch up to VU? We will be chatting all about that. And BlackRock is set to launch or is launching a Texas-focused ETF. Why the Lone Star State is getting so much interest from investors. And last up, we did kind of place a bet on this. Unfortunately, I guess I lost because we will be talking about Schwab. A potential Bitcoin ETF could be coming from that issuer. We will talk about crypto yet again in this episode of ETF Pulse. In my defense, Nate, you wanted to talk about Schwab's Bitcoin ETF. I didn't add that topic. So I think
also, I got you to make that bet last week after a cocktail, so I had an advantage there.
You definitely hedged, which is funny since we'll be talking about Bitcoin.
But you're making me talk tariffs. I can't believe you're making me talk more tariffs.
Well, we have to. I mean, it's Liberation Day, as the president has taken to calling April 2nd, right? So tariffs are launching. So listen, we're not going to talk too much about tariffs. You and I have talked about this ad nauseum, I think. But it is obviously something that markets are heavily watching right now. How big, how wide are the reciprocal tariffs are going to be? We still, at least at the time of this recording, still do not yet know. However, and I think that this is pretty interesting because we're talking all about flows. Something rare happened last week, which is that we actually had net outflows in the ETF space. And that doesn't happen too often. So we had 10.5 billion in net outflows last week. And we actually had over 20 billion of those outflows coming just from US equities, which, of course, makes sense as investors are really kind of concerned about tariffs. Vanguard, actually, VOO, led that equity shed $22.6 billion in outflows from just that one fund. I mean, I don't know how often we've seen net outflows. You might know better as you kind of have had more experience in this space, but does that, I don't want to say concern you because I have a feeling you'll say no, but I think it's a pretty interesting thing that and we'll talk about the inflows into the quarter in a second, but yeah, I mean, as much as you say that you can't invest around tariffs and that it's a short-term thing, I mean, investors clearly are very concerned and very worried about tariffs and their impact.
Yeah, I mean, a couple of things here. So one, certainly there have been plenty of weeks where there are outflows from ETFs. So I don't necessarily think this is unique. And I personally try not to read too much into short-term flows. As you mentioned, that's not going to be a surprise to anybody. But I think you're right in that there is a lot of uncertainty around the tariffs. And anytime you have uncertainty, investors can get a little bit nervous. And maybe you have some investors who are saying, you know what, I'm going to take a little bit of risk off of the table. And I get that. My challenge or the concern that I have with that is that, and we talked about this, Kristin, with these tariffs, we don't know how these are going to play out from one day to another, right? So they're being implemented, but we can wake up on Friday and the whole posture from the administration has changed. We just don't know. And so I think it's very difficult attempting to tailor or trim a portfolio based on tariff headlines. I just think that's a really difficult proposition. But is that impacting shorter term flows? Yeah, I think that's a fair characterization.
It's not impacting quarterly inflows, though. So let's talk about that because the year-to-date inflows, and we've now just finished that first quarter, is around 300 billion, which is insane because, again, remember, we had 1.1 trillion of inflows in 2024, which is a record-breaking year. And I think the year before in 2023 was also a record-breaking year. I mean, this is a record pace still, despite everything that you were just saying, right? We had tariffs and the concerns over that. We had the changeover of the presidency. International has kind of started to get boosted. We've seen Bitcoin really sort of come down a little bit as Bitcoin prices have really fallen. I mean, it's been a kind of bit of a roller coaster first quarter, and yet investors are still continuing to buy. I'm curious to know what you think. Why ETFs? What is it specifically do you think about ETFs that has really captured investor interest and even in this kind of period of volatility?
Yeah, this is the much more interesting story to me because, as you were noting, right now we are on record pace for the ETF industry overall for 2025. And yeah, there's been a lot of consternation in the markets. Now, if you look at the S&P 500, it's only down 4 or 5%. If you look at the Nasdaq 100, something like the Qs, it's down more. We're not talking about some enormous drawdown, but I think if you were to just take a step back and go, okay, are investors going to be more cautious here? Or are they going to be jumping in with both feet? I don't know that you would have said they'd be jumping in with both feet and we'd see 300 billion going into ETFs. I think what's happening here, and we saw this a little bit at the exchange conference last week, the industry is still clearly accelerating. And I know that is cliche, right? We've been talking about this for a while, but ETFs are how investors want their exposure, whether we're talking about equities, fixed income, crypto. They want that exposure in an ETF wrapper. And yeah, I thought flows might pull back a little bit given the increase in volatility and uncertainty over tariffs and those sorts of things. But you look up and something like 160 billion has gone into equity ETFs. A decent chunk of that, by the way, into actively managed ETFs. That's clearly the momentum there. It's carried over from last year, but there's been around like 105 billion into fixed income ETFs. And that makes sense to me because if investors are getting a bit more cautious, or perhaps they want to lock in yields, they may be looking at fixed income. But the bottom line is, I think between all the things we've talked about, lower cost, transparency, accessibility, if investors want exposure to any area of the market, they're looking to ETFs.
So do you think, because we use the word investors, like it's obviously such a broad thing, right? An investor can be a retail investor, it could be someone who's institutional. Do you think that there is one particular category that's kind of leading the charge, like into the ETF space? Do you know what I mean? Do you think it's really advisors that are switching more into the ETF space? Do you think it's retail investors that are they have more money that they want to invest, more and more of them are getting involved in the market and they're utilizing ETFs, or even perhaps they're asking their own financial advisors, right? Hey, I want my money in ETFs. Where do you think that kind of interest, or who's driving that interest, really?
I honestly think it's coming from everywhere. I think clearly financial advisors, they lead the charge here. That's always been the case in the ETF space. But whether we're talking advisors, retail investors, more traditional institutional investors, everybody wants their exposure via the ETF wrapper for the reasons that I said previously. And I do think, there's over 4,000 ETFs now in the market. And we've talked about some of the launches over the past several weeks. You have every type of strategy you could possibly imagine. We have leveraged ETFs. We've talked about actively managed ETFs. We've talked about crypto ETFs. The bottom line is if somebody wants exposure, they can get it in an ETF wrapper, and that's where they're going. It's almost like, can you imagine somebody launching a mutual fund today and not an ETF? Like, why would you do that?
Well, I have no, I mean, we don't really, we do cover mutual funds at ETF.com somewhat, but it's not exactly our bread and butter, of course. Obviously, we're not called mutualfund.com. I'm now that I'm thinking about it, I'm curious to know if someone has launched a mutual fund recently. I'm sure.
I'm sure they have, but you get my point, right? It's like, why would you do that?
Yeah, I have no idea. I don't think the market is clamoring for. I don't know any 35-year-old investor that's saying to themselves, you know what, I really would like a mutual fund.
Right. And the other thing, like I mentioned, the rise of active ETFs, you think about some of the names that have come into the actively managed ETF category, even here just recently, names like MFS and Raymond James.
Yeah.
We have Lazard set to enter the space. The way that I view that is that's offering a whole new supply of active strategies to investors. These issuers are coming in with their best portfolio managers and their flagship strategies. And I know I've talked about this. It's a situation where that supply, that new supply coming into the market is actually creating demand, right? Because investors can access things they previously couldn't have accessed in an ETF wrapper. So I just think it's a little bit of everything, and I fully expect it to continue.
Well, part of the inflows that we saw, Vanguard led the outflows, but we saw IVV leading the inflows, 22 billion last week, which kind of dovetails nicely into what we want to talk about, which is IVV. Now we have VU, then IVV, then SPY when it comes to the biggest ETFs out there. And Now, I don't remember. We did talk about this in one of these Pulse episodes, but you had called this. You said that IVV was going to be next, that they were going to unseat SPY next. But I think, Nate, you said it was going to happen later in the year. I don't know if you called it happening this early. I mean,
Well, I
this
have a
was
couple of predictions here. I mean, yeah, I did expect IVV to jump past SPY. We can talk about the timing, but remember, part of what I had said is that I predict either IVV or VU or both to chop their fees because now that those are running 1-2 in this race, I think having the ETF crown, the individual ETF crown, means something to Vanguard. It means something to BlackRock. And I think they're going to be jockeying for a position here. And the easiest way to catch investors' attention in a very, I'm going to call it boring category like S&P 500 ETFs is by lowering your fee.
not a boring category. This is a commentary about the US economy. I think it's so fascinating.
I say boring just because this is plain vanilla exposure, right? This isn't the stuff that I was
Vanilla's
saying
the
before,
best.
crypto ETFs and leverage ETFs.
Vanilla's the
So
vanilla
boring's good. I like boring.
ice cream flavor. I get what you mean, though. We all always need something extra on top of it. But yes, well, I mean, you're right, though, because I think for investors, and SPY is a little bit different, and SPY operates differently. SPY has different uses, and so SPY can't really chop its fees and compete in that kind of way, the same way that SPLG, VU, and IVV can, right? Is I think for investors, unless you have other thoughts, I think for investors when they're looking at like a S&P 500 fund, which I think most people say you should always have, like it's one of like the bedrocks of a portfolio, is going to be the fees. Because if you look at the holdings and you look at the percentages of the holdings, they're not there's no big great differences in strategy there. Really.
Yeah, I would agree. I mean, at the end of the day, that's the biggest differentiator between these ETFs. But I just pulled up the numbers here. I mean, so as we sit here today, IVV is now only about 10 to 11 billion dollars behind VU. So again, I'm interested to see if IVV can actually catch VU. They both have passed SPY, as we talked about. And if you look at flows year to date, Vanguard obviously leads. Something like 35 billion has come into VU versus 22 billion into IVV. But what's interesting is that SPY leads literally all ETFs and outflows with around 20 billion. Now, I do think there can be some noise there because I don't want to get too far in the weeds. You can have investors like reshuffling for tax purposes, right? Like basically tax loss harvesting at the end of last year, and then they're re-entering their core position in one of the other S&P 500 ETFs. But I guess what I'm getting at, I think longer term, the direction of travel, we know what that looks like. It's going to be VU and it's going to be IVV continuing to pull away from SPY. I don't think there's any question about that. But again, I'm real interested to see, like, can IVV surpass VU? Because I think everybody just assumes this thing's over, right? Like VU's gonna, they have the crown, they're never gonna give it back up. I don't know if that's the case. I'm interested to watch that.
I'm waiting for SPLG to really kind of catch up because that is obviously SPY's lower fee sister.
Yeah. And it's the lowest fee S&P 500 ETF on the market, but
right.
It's so far behind on assets. I'm not saying it can't, it just has a lot of ground to make up.
Right. But as we see that increased interest towards a very low cost broad market fund, I wonder if we'll maybe even see perhaps some marketing around saying, hey, you've heard of VU, you've heard of IVV. Guess what? You can actually buy SPLG and spend less than both of those funds.
I would be pushing that if I were State Street. I would be making a much bigger deal around it.
We're not the marketing department.
It's probably a good thing.
All right, so let's talk about BlackRock. Let's talk about the Lone Star State. They are launching a Texas-focused ETF, which there's already an issuer on the block that does that. Texas Capital. That's their entire ethos. I have talked to Ed Rosenberg before. He's head of their ETFs over there, and they've recently launched the money market MMKT ETF. So there's some interesting things happening at Texas Capital, but that's literally Texas Capital's entire strategy. Invest in the Lone Star State and invest in the companies and the businesses that are essentially rising there. Do you think we're going to see, and I already know, well, because there's a potential other state, how many more of these sort of state-focused ETFs do you think we're going to get into? Because I think that's kind of a new sort of frontier that we might have coming up.
Well, I think there's somewhat of a limited pool here because obviously the state has to have enough in terms of economic footprint, or has to have a big enough economic footprint. And I saw the stat that the GDP of Texas, you may not believe this, it would make it the 9th largest country in the world if Texas was actually a
Oh,
country.
I've heard of
Right.
this. I mean, you
Yeah,
have
but Texas,
Austin, and I mean, you have the oil industry there, inside of Houston. Austin has become this sort of burgeoning like finance place where a lot of younger people are really flocking there. There's really a lot of startup incubators even popping up in cities like Austin. I, and Texas is a huge state, and it is clearly trying to position itself as a sort of finance capital.
well, right. I mean, it's viewed as being very pro-business, right, in terms of the regulatory backdrop. It's certainly more tax friendly. So I think you add all this together, just the size, you kind of look at the, again, the regulatory backdrop, taxes, those sorts of things. How many states would fit that profile? And,
California.
some people have tried, I remember this was years back, I believe somebody tried to launch like Oklahoma ETFs or something, and they never took. But this
That
was a
doesn't
while back.
surprise me. I mean, what
Right. Me
what's
neither.
happening in Oklahoma that I don't know? I don't know.
So I don't think this is going to become a huge trend. Could we see a few other of these come to market? Yeah, I think that's possible. But I want to back up here for a minute. And because you mentioned Texas Capital, and I think this entire thing is a really interesting story. And here's how I would lay this out. I honestly, I was a little surprised to see BlackRock entering this category for a couple of reasons. One, if you look at those existing Texas-focused ETFs on the market from Texas Capital, they don't have much in the way of assets. And they've been on the market for a year now, right? They've been out for well over a year. And I feel like BlackRock typically looks to enter categories that have been lighting it on fire, right? So that alone is a bit odd to me. Like, why are they entering a space where it hasn't really proven to be some huge category? So that's unique. Now, maybe they see something here. I think you may be aware that BlackRock is involved with this forthcoming Texas Stock Exchange. I don't know if you saw that, and maybe there's an angle there. BlackRock has been pulling back from ESG, which Texas didn't really like, and so maybe there's some other angle to the story here that I'm missing, and there's a reason for BlackRock to get involved. But
You know something that we don't know.
yeah, just because otherwise, if you look at again the assets in the Texas Capital ETFs, it's not something where I think BlackRock would sit in their boardroom and look and go, we really got to be in that space. But putting all that aside, you mentioned Ed Rosenberg and Texas Capital. Imagine being Texas Capital, where you launch the first money market ETF, right? MMKT, and then BlackRock follows you into the space by launching two money market ETFs themselves. And now they're
I know
basically
it actually
copying your
has to
core
fit.
equity strategy.
Exactly. Like it is both I would call this both a huge and incredible compliment, but then also we already know Texas Capital is very small compared to BlackRock, obviously,
Right.
in so many different ways. And so if BlackRock wanted to, I mean, because to your point, this fund is literally snatching the entire sort of investment ethos of Texas Capital.
But that's their business. Their business is
That's
investing in
their
these
entire
Texas-focused, equities or companies headquartered in Texas. They have a large cap version, a small cap version. I think they have an oil ETF too, and then this money market ETF, right? And BlackRock's now copied both of those. Now, look, we always talk about how tough competition is in the ETF category, right? It's called the Terror Dome for a reason. We talk
Yeah.
about that all the time, but boy, this is Texas Capital can't be feeling great right now.
Or who knows? Maybe they do. I don't know.
Well, I guess if you think that BlackRock's going to bring a
Last
bunch of
week.
interest, around Texas, based equities, then maybe.
I have no idea. I mean, it'll be interesting if BlackRock sort of eats Texas Cap's lunch, so to speak, or if this actually just increases. As you started off the show saying that what we are seeing is the increased demand is sort of following the increased number of products, and
Yep.
maybe this is the thing that gets people thinking maybe I should start investing in Texas. And who knows, maybe other issuers start saying maybe we should launch a California-based, fund, not Oklahoma, but I mean, there are a lot of states and even cities out there like Miami, there's New York, there's California that could perhaps potentially support because of the industry that they have.
If my memory serves me correctly, I believe our friend Eric Balchunas over at Bloomberg, I feel like he tweeted last week that somebody filed for an Alaska ETF.
Well, that makes no
I'm
sense.
serious.
I don't know. I'm not an issuer. So obviously there has to be reason for it. I don't know what's happening in Alaska, other than bears and fish, but I know there's something going on there. All right, let's end the show on your favorite topic, and apparently it's begrudgingly becoming one of my favorites, I guess, which is crypto Schwab, potential Bitcoin ETF coming from Schwab. Why do you think Schwab wants to enter into this incredibly crowded space now of Bitcoin? And also, this is saying a lot that Schwab wants to do this, right? I mean, the take up of Bitcoin from these issuers that had previously said, and frankly, even brokerages that said, we're not going to let you buy these, spot Bitcoin products. We're not going to let you buy Bitcoin through our platform. And they're now going out and launching Bitcoin ETF.
First of all, what do I win for you talking cryptos? I don't even remember what we bet last week.
I don't either. I'm
Okay. I feel like it needs to be a pretty good, I'm going to say some sort of dinner or something like that. I think you owe me
okay.
something fairly nice.
In April, I guess either sushi or steak dinner. I'll let you choose.
All right. Yes, which I'm excited to be out in New York City in mid-April for the ETF.com annual awards. That'll be fun. But okay, Schwab Bitcoin ETF. Let me offer just a little bit of context here around why I thought this was interesting. So Blockworks, they have a reporter by the name of Ben Strack, who was actually at Exchange last week. He does a great job covering crypto ETFs. And he reported that Schwab plans to offer spot crypto trading on their brokerage platform after the regulatory environment changes. And that's not necessarily new. They've talked about that for a while. I've said at all of the major brokerages, I think spot crypto trading is going to be table stakes at some point. I think they're all going to offer it. But he also said that Schwab wasn't counting out launching a spot Bitcoin ETF. And I'll be honest, I have no idea why Schwab didn't launch a spot Bitcoin ETF from the get-go, because they actually have a crypto thematic ETF that invests in crypto-related equities. So the point is that they're clearly not afraid.
STCE.
I think that's right. Yeah. But what that shows is that they're clearly not afraid of the crypto space, right? Which I think we knew. And I felt like given the brokerage platform they have and all of the advisors that are on that platform, it seemed like an absolute no-brainer to launch a spot Bitcoin ETF. But instead, they sat out the greatest ETF launch in history. And so I never understood that. And I'll tell you, I actually felt the same way about State Street. Now, State Street doesn't have a captive brokerage platform, but just given their prominence, third largest ETF issuer, they offer gold ETFs. I didn't understand why they didn't launch this. But to more directly answer your question, let's say Schwab does launch a Bitcoin ETF sometime soon. Can they compete? Yeah, I think they can, because Schwab's MO is to come into a category at a very low price point, right? Their expense ratios tend to be very, very cheap. Now, the spot Bitcoin ETF category overall, we're talking, that's already very inexpensive, but I could see a scenario where they undercut existing issuers on price.
Yeah.
And in the ETF space, as we've talked about it, distribution is absolutely king. And they have a distribution platform. They have this brokerage platform with advisors with trillions of dollars. And so I think they can get that in front of them. And I think they can get assets into it.
Do you think that how long do you think it would take them to catch up to IBIT?
I don't know that anybody is going to catch IBIT. I think
that's what I'm thinking about right now, right? I mean, I'm looking right now. I can't remember what their AUM is right now, but I mean, they're huge,
I don't think they would catch IBIT per se, but I've talked about this before with
competition for second place. I mean,
yeah, sure. I think they could take second or third place, but more importantly, and BlackRock actually talked about this. They said basically one of the benefits of offering a spot Bitcoin ETF wasn't necessarily the assets coming into the product and the fees that they were making off of that. What they said was that brought in a new pool of investors who maybe hadn't looked at iShares products before. So they initially came across IBIT and got familiar with iShares, and then they started looking across the rest of the iShares lineup, said, oh, that's interesting. You have some products here that maybe I would want to invest in. I think it would be the same on Schwab side, where maybe a spot Bitcoin ETF would bring some investors under the Schwab umbrella, and they start looking around at other Schwab ETF. So I think there's two benefits. It's, you get assets into the product itself, but also maybe you get investors and advisors to look at your full lineup.
I mean, there has to be a strategy behind it, because how they say sometimes, right, early is wrong, but then also so late can also just be wrong, right?
For sure. I think early was the right answer in this case. But I think there are a few issuers who could come in late to the party and have success. And there's no question that Schwab is one of those, which by the way, I have to mention. So Ben Strack, who I mentioned at Blockworks, he also reported that Vanguard, they reiterated their view that crypto does not belong in a well-balanced long-term portfolio. So I just thought that was interesting that Vanguard is sticking to their guns,
I'm
which
alone
Kristin, I just don't know if that's the right
on
decision. I
that
think that may cost them longer term.
I think they're going to be alone on that island
I do too.
at
Yeah.
some point. And I agree with you. I think that they're going to be wrong in that. I mean, and BlackRock even came out and said this and said that like if every what was the quote again? If like every you talked about this, like if every millionaire or every asked for a bit.
Oh, yeah. I don't remember the exact stat, but yeah, they had like if every millionaire invested in one Bitcoin,
Yeah.
yeah, there's like not enough Bitcoin to go around was the
Would not
basic
be enough Bitcoin in
gist
the
of
world.
it.
Exactly, which was interesting. I mean, there we have seen increased demand and increased pickup, and spot Bitcoin ETFs are a cheap way for you to have very minimal exposure, right? I mean,
But here's the other thing too. Unless you think, and some people do, but unless you think Bitcoin is just going away altogether or crypto's going away altogether, which I don't think that, like that's not happening in my opinion. But unless you think that's the case, why would you not have uh, crypto ETF options if you were a major ETF issuer? Like, why would you just ignore that category altogether?
I mean, I don't know.
That doesn't make sense.
We need to figure. I mean, I wonder what if we were to launch an ETF, you and I, what the fund would be.
Did you know, here's a fun fact for you. This was back a couple of years ago because I was incessantly tweeting about spot Bitcoin ETFs, and somehow I branded myself inadvertently as like the spot Bitcoin ETF guy or the crypto ETF guy. I actually had legitimate people in the industry who either A, said like, hey, Nate, you should launch a Bitcoin ETF, or B, there were a few people that actually thought I was going to launch a
I
Bitcoin
mean,
ETF. I'm not kidding.
I think we'd have I think our fund would be well marketed, have great tickers. That's not to say anything about the investment strategy of the fund, but I think it would be good. I don't know what it would be,
All right, we'll
but
have to hit up our white label ETF issuer friends and see if they'll do this for us on the cheap.
oh, well, that's what we would need. That's what we would need for sure. All right, we will continue to see if next week I talk again about cryptocurrency. I'll check in with you on tariffs, which is of course your favorite topic on next week's episode of ETF Pulse. Thanks so much for joining again, as always, Nate.
Always fun. Thank you.